Welcome back, everyone, and welcome to your nightly video for the end of February the 29th. When we look at markets getting inflation data today that comes in at the consensus estimate, and then we see this outsized move up in the pre-market action, only to see it retrace during the cash hours and then bid back up, the market is clearly waiting for something. It is coiling. You may have heard Rob refer to something like this as he recorded his video the other day. The market on longer term time frames, like the daily chart that you see in front of you right now, each candle on screen is a day of price action on the S&P 500. Now, today's candle, as you can see, has a tail on it, and we are rising off of a low. Not a one that is lower than the lows from yesterday, but indeed a low. And you can see that we are able to get that launch, but not able to clear the center of that linear regression channel. Now, is that important? Well, the answer is yes. We're in a market that's moved into a tighter uptrending range, and this trend channel has been around since the back end of October, beginning of November of last year. The market is clearly in wait, and we want to identify that portion of time and price that can unlock more upside and or present some risk for some downside action. So I'm going to take you from the daily candlestick chart view of the S&P 500 directly over to a toolkit that has now seen some incredible alignment on signals. Now, what is that all about? Well, what you're looking at right now is the S&P E-minis, the futures on a weekly, daily, and 4-hour time frame. Now, if you are looking at the price action at the beginning of the week and trying to get a sense of, hey, where are we actually going? You may have heard me in videos just like this say it's very likely that outsized moves are going to be relegated to the inflation data that came out today. And we were in a very tight range prior to that. It does make sense as we had this incredible blast off move from NVIDIA earnings, and you can see that on the 4-hour chart there. And we retraced back down. In fact, the area that we launched off of was 49.60, and we zoomed up to make new all-time highs at 51.23.5. That 160-point range, well, we only retraced about 60 points of it, and today was the day where we are now back on bullish signals on time frames under the weekly and the daily chart. So what you can see is the up triangle, elegant, simple, one on-chart indication on a closed bar tells you we are now in the mode for buyers to have a higher probability of success. And if you look at the knockback effect, the weekly chart's been in a buy signal state for quite some time. Of course, back end of October, beginning of November of last year. And there's continuous room available to continue moving up. You can see that in the subchart. What we saw was some fragility in the daily chart. After that massive move up last week on NVIDIA earnings, the higher high the next day, and then the first 4 days or 3 days of this week, giving us more of a sideways range, as you can see there. We had some hiccups, if you will, as prices made higher highs. The triple S indicator was not able to make those higher highs. Those divergences got locked in. At this stage, we're actually seeing the divergences start to get turned over, and we are now seeing the timeframes underneath the daily chart realign with bullish signals. So that is an impactful and multiplicative type situation. Weekly, bullish. Daily, reorganized as bullish, and the 4-hour bullish as well now. As we move into tonight, China data breaks later in the evening, and tomorrow, ISM data, the hard goods breaks at 10 a.m. Eastern time for the US market. It comes with price information as well. As the next two big data points break, we wade into them with a bullish stance, and we are in a spot with this market where a tighter coil leading to a bigger or outsized move on data points just like these, growth and inflation related data, well, it's a potential outcome for us to see a bigger than normal move again into the end of this week and the beginning of the month of March. The triple S indicator on screen confirms for me we've got a positive setup, but one that requires continuous buying or follow through, because we are in an area of late stage in this overall uptrending market. Now, I'm looking really forward to sharing insights with you that deepen what you heard from me yesterday in a very special education session that I'm going to be doing with you this Saturday. Now, before we go there, today I was able to use the toolkit on screen with some smaller time frames, like the 5-minute time frame, for example, to gross about $300 US, trading the ES, the S&P E-minis, on a day trading basis. Now, I'm looking forward to sharing how that trade went down, where the ins and outs were. I'm looking very much forward to sharing any other trading I do tomorrow on the Saturday session as well. Both day and swing traders are in for a treat. This is a market moment to behold as we are pushing out potentially to new all-time highs, or stretching that elastic band to the point of snapping. Join me this Saturday at 10 a.m. Eastern Time for updated insights, new strategies, building upon what you may have heard from me yesterday. And of course, for those of you that are brand new and listening in tonight, I look forward to sharing my personal strategies and approach to the market that we're in, both day and swing trading. Go to becomeabettertrader.com/yes and get your seat. We'll see you there. Have a wonderful rest of your day, and thanks for watching.